You're now plugged into the Delphi podcast.
Hey everyone, and welcome back to the podcast. I'm your host, Tommy, and I'm thrilled to be joined by Michael Rinko, who's a senior markets analyst at Delphi, and my partner, Kevin Kelly. We're going to talk at length about Mike's report called Attention is All You Need. It's one of the most interesting reports we've ever published. It's a totally different way to think about markets, valuations, attention, where things are going, meme coins. It's a phenomenal report. So I'm excited to chat about it. Mike, why don't we start with you about the inspiration and genesis for why you even wanted to write this?
Yeah, thanks for having me on, Tommy. The inspiration for this report was really just watching meme coins take off this cycle, and comparing that to past cycles. I guess last cycle the L1 trade was huge. We had the birth of DeFi, and then we had kind of NFTs pop off at the top of last cycle. And so far this cycle, it's really just been all memes. Obviously, Bitcoin, Ethereum, Solana, the majors have done pretty well. But so much of the activity, trading, and really just like attention has been focused on meme coins. And from my perspective, as watching and writing about markets, I've noticed that people kind of have like a visceral reaction to meme coins. Like you either love them or hate them. And regardless of whether you love or hate, just the broader trend has kind of like provoked some pretty like existential like questions and angst within the space. So there's a lot of people asking like, is everything a meme? Is it all worthless? Does this mean that the market's topping? Because if everyone's trading memes, that must be very frothy. So those were kind of the questions that I, had as I sat down to start to write this piece.
Kev, what about you? I have some questions for Mike, but I want to know your kind of inspiration and genesis as well.
Yeah, I think one of the reasons why I really gravitated towards this idea and love the piece that Rinko and the team put out is, I mean, you know me, I'm more of a macro kind of big picture type thinker. And when I take a step back and think about from a very kind of primitive level, when you think about just markets in general, right? Markets and asset prices, they're really at the end of the day, all driven by a function of supply and demand. And so this concept of attention becomes really important because, as I'm sure we'll get into, attention really does sit upstream of a lot of things. Importantly, it sits upstream of demand, right? We can talk about the supply side, and supply side economics get a lot of discussion, right? Especially when it comes to crypto with token unlocks and all that. And that side is certainly important, but I think longer term, the sustainability or success of any product, right, whether it's a crypto product or elsewise, it really depends on that longer term sustainable demand side. And attention sits upstream of that because it has the power to influence behaviors, has the power to influence actions. And so we talk about these concepts like distribution, right? Which again, when you put your attention hat on, distribution is really just the aggregation of attention, right? And so the ability to actually direct, to command and capture sizable flows of attention and then direct those is really the ability to mobilize significant buyer power. And so it's why you see things like Roaring Kitty, right? With the whole GME, I won't call it a scandal at this point, but the whole GME debacle that's going on right now. You see this with a lot of KOLs, right, in crypto, monetizing or pushing sizable flows of attention to whatever asset it is or whatever ecosystem it is that they have, exposure to. There's a lot of kind of avenues we can go down with the attention concept, but the fact that it sits upstream of demand to me and having markets be really just a function of supply and demand is one of the big things that stuck out to me when I first read this.
That's awesome. So, Mike, one of my questions for you and Kevin is that you mentioned that the L1 trade used to be big, right? Brand new blockchains, innovative tech designs, different ways to approach the community. Some have been successful, some haven't, but there's generally a long-term vision there, a long-term sell. The attention economy with meme coins is not new, but it's a relatively new concept, right? So I'm kind of wondering, how do you think attention fares on a long-term basis, right? Do meme coins like Pepe and Bonk and stuff, like, is this everlasting, or is it just greater fool theory, or is there a real reason why the attention is not only short-term but is long-term too?
Yeah, so great question. I think to Kevin's point, this attention framework you could apply it to meme coins, and I would argue that meme coins are just like the clearest, like most extreme example of attention being like a fundamental or kind of being valuable in and of itself. But it applies to everything, every asset, I would argue. And I think we actually saw this last cycle with the L1 trade. So for many years, like Ethereum was kind of the only game in town. And then last cycle we had the emergence of like all sorts of L1s, most of them concentrated like within the EVM ecosystem. But then we had the run that Solana went on, and I think Solana actually really benefited from the attention that like a handful of people, most notably like SBF, drove to that ecosystem. And it was able to capture that attention and convert it into developers, users, and capital. And went all the way up and then almost all the way back down, but some percentage of that attention on the developer side, on the capital side, and on the user side stayed from cycle to cycle, and that kind of now forms the core of the Solana network. So I think to directly answer your question, I tend to agree. I mean, attention is fickle. It's really hard to like put attention into a DCF and forecast it out 10 years and then discount it back. It's not as kind of tangible as a cash flow is. But I do think that the winning protocols, the winning applications, and the winning like tokens will be the ones that can capture and retain attention over long periods of time.
Kev, I mean, Mike, that's an incredible answer. And I'm curious Kevin's thoughts, because Kev, you've spent so much time thinking about life through DCFs, through relative valuations, through, the whole slew of like Wall Street metrics you and I both know and hate. Like, how do you feel about Michael's framing there? Like, are you like fully shifted into this world where your valuations are now based on attention? Like, how do you think about this?
Yeah, it's a good question. It's kind of slashing all of our prior knowledge, right, or experience, especially when it comes from the worlds that you and I both come from in terms of, primarily equity investing. I think this concept of attention, and we'll give a couple of examples too, because I think that'll be really helpful to make this a bit more concrete. I would say this concept of attention is important because it'll sit upstream from fundamentals in certain cases, right? So what I mean by that is, I think we're getting to a point now, we're approaching a point where people are starting to understand, especially I'll say people within the crypto industry, but again, this applies to a pretty broad array of industries. I think we're getting to a point where distribution arguably matters as much, if not more, than the underlying product or tech. And to caveat, it's not that the underlying product and tech doesn't matter, right? You need those things, but you can have the best tech in the world. If no one knows about it and therefore no one's using it, or the best product in the world, if no one knows about it, no one's using it, it doesn't really matter, right? It's kind of like the tree falling in the woods with nobody around. Distribution is going to become a lot more important, I think, especially for crypto protocols, applications, new, emerging ecosystems, because what you're really trying to do at the end of the day is drive more usage, drive more capital flows, which attention all sits, upstream from. And that can wind up leading to increased on-chain activity, increased fees, increased quote unquote fundamentals. But you need to be able to not only build something, but also position that in a way, or go to market with that in a way that drives a lot of eyeballs, drives a lot of attention, because that is what influences people's behaviors and action, right? We could all sit here and name, call it tier 1, tier 2, and maybe even tier 3, L1 or L2 blockchains and ecosystems, right? There's some examples where some of these protocols have incredible actual novel tech, but they struggle on the distribution side. They struggle on being able to drive enough attention to it. And attention is one of the scarcest resources out there at this point, right? And so again, getting to that kind of point where distribution matters arguably as much as the product or underlying tech itself, I think we're also reaching a point where good enough can beat best in class if the former wins the distribution race, right? There are other places eventually, right, or other ecosystems or chains where meme coin mania can take off. Right? It's possible. One of the big things, we use Solana as that example that Rinko mentioned, core value prop initially was, faster, cheaper chain with arguably much better UX, right? It made it the ideal place for meme coin media to pop off. That served as a huge distribution funnel that attracted a lot of attention to Solana. And with that came more active users, more capital inflows, more builders building more applications. And so it becomes this kind of reflexive circle, right? That distribution, the ways in which these teams can tap into or try to garner attention through distribution channels, I think is going to only become more and more important especially the more and more things we can do on chain.
That's awesome. So Kev, is your take that teams need to use distribution channels differently, or is it that to win they need to build out their own distribution channels, or like would Telegram win in this situation, or would like the Ton blockchain win, or is it more like Solana needs to start leveraging TikTok and Instagram Reels? Like, yeah, help me bridge the gap there.
Yeah, no, I think it's a really good question because I don't think there's one right answer. If the end goal is to drive as much attention as you can to whatever it is that you're building, right? There's multiple ways you can go about that. You can ideally build out your own large distribution, right? Which at this point, a lot of what's happened on Solana, I think, has been in some ways has created this kind of word of mouth, right? Where if everyone's trading meme coins on Solana and trading Sol back and forth, that's where a lot of this activity is happening. But you look at something like Athena, right, with their recent airdrop and them going after and targeting, a select handful of really active NFT communities that they wanted to include in that airdrop. That's a great example, I think, of finding ways to tap into the distribution of other teams, right, or other ecosystems and communities to drive attention to whatever it is that you've built, right, and really go where your potential customers, your active users are. This concept of meeting the customer where they are, right, which again applies to crypto, but applies to other, Web2 products. Really what you're saying is go to where the attention is and where are these big pools of attention sitting and how do you actually tap into those or get in front of those? Because I think at this point, we're all in this kind of race for capturing as much of that attention as we can because it is, in some respects, a relatively finite resource.
How is this changing like both of your views on how we should all operate, right? Is it that, hey, we should just be on Reddit and Telegram groups and look for the best meme coin? I mean, it's exciting, but it doesn't necessarily like get me out of bed in the morning in building long-term tech that matters, right? Like, am I conflating meme coins with this attention idea in the wrong way, or how do you guys view that?
I think it's a good point, and that was something that was a realization for me midway through the piece. Was like I think part of the reason why attention is such a prominent force right now is it's like indicative of kind of where crypto is in the adoption cycle. So like there's only, call it like 5 million people on chain right now, which is less than 1% of Earth's population. And I would argue that like crypto still isn't solving everyday problems for everyday people. My mom wakes up every day and checks her email, checks the weather application, probably uses Google search. She's a normal person. Those applications are solving like normal problems every day for her. She's not using crypto ever. You know what I mean? So I think like until crypto bridges that gap and like really solves a problem, a core problem for normal people, it's all going to be speculation. It's all going to be, we're all going to be trying to guess what future problem that's going to solve. And then the way that you try and value these things is going to be inherently speculative. And, that's kind of attention right now. That's my view, at least.
Yeah, I would say to also tie that back to a couple of examples that you had mentioned, Tom. One of the ways it's shifted some of my thinking around this, and I think we should get into when and if fundamentals matter. We can take that maybe in the second part of this because that is very relevant, right? It's not to say fundamentals don't matter, but when it comes to this concept of attention garnering it and really distribution, one of the ways it's kind of shifted some of my thinking is one, yes, to Rinko's point, we're trying to maybe guess or have a best guess at what the next big problems, right, or real world problems that crypto will eventually solve. And there's a lot of really exciting things for us all to be excited about, right? Crypto AI, I know that's a big focus of ours right now. There's tons of those examples, a lot of which haven't really come to fruition yet, but there's potential. The other part of that is, okay, when we have those types of ideas or solutions for problems that crypto is trying to solve, where does that actually wind up getting built, right? So to your earlier point about, the Ton ecosystem, one thing that's kind of shifted in terms of my view is they have such a huge opportunity to tap into the distribution of Telegram, right? Which has at this point, what is it? Something over like 900 million monthly active users, right? You launching, let's say, a DeFi protocol or DeFi application on Ton that gives you access to that type of distribution gives you a huge leg up in terms of potential usage, users, transaction activity because of that distribution. Then going and building it on, sorry for using it, but going and building on Cardano, right? And I know that's the classic example that we all like.
You don't have to apologize. It's a fair negative example.
Right. But it is right. It's kind of like two sides of those extreme. And so I'll give you another one, like WorldCoin, which has been very controversial depending on, where you sit or what you think about them. But one thing I will absolutely give them is they now have verified biometric data, for example, on I think something like over 10 million people, right? They just recently launched their own, L2 that they're kind of spinning out and trying to drive builders and app developers to now build on. And arguably WorldCoin's distribution of all those verified users, that network of verified users, I think has already become one of their biggest competitive moats that will attract people over. We're seeing this again with like Coinbase and Base Chain, right? It's this concept of distribution going where you have the best shot at actually not only building something that can be novel and can solve a problem, but also where those users will be, where that attention, those pools of attention are going to be, that gives you kind of that leg up. And so what that means for valuation, again, we can spitball back and forth on, but just in terms of why distribution matters and how to start thinking about that or framing it, that's one thing for me that I think has been refined from doing a lot of thinking and going back and forth with these guys on this idea.
I mean, at a very basic level, it seems kind of, again, not obvious, like, go build on the biggest distribution channel.
It does kind of seem obvious, right? When like there is an element to that.
So what is non-obvious about the idea of going toward the biggest distribution channel from like your research, Mike? And again, I'm not trying to be like, critical, but just wondering like, that's kind of what we know, but you've picked out specific things that you found that are important there. Let's dive into that a little bit.
Yeah. Well, I think it's a good point. Like attention being valuable isn't like a groundbreaking concept to people. Like I think people are like aware of it. Once you point out a couple examples, everyone's like, oh, like obviously, you know what I mean? Like that's kind of the reaction. That was the reaction that I had as I was writing the piece. I was like, so how do I make this interesting? What what novel insight am I gonna, write down? And I think something that I kind of realized as I was writing the piece is the unique part about attention in crypto is, there's this meme like number go up makes the tech got better, right? Some coins up 10%. Oh, the tech suddenly got better. That's a meme, but there's like a kernel of truth in there too. You know what I mean? And the example that I use in the piece is Bitcoin. When Bitcoin launched, it was worthless. That people were sending thousands of it for a slice of pizza or whatever that was. Nobody had heard about it. You couldn't use it at any store. There's nothing to do with it. And it certainly couldn't protect you against World War III. You know what I mean? There were a couple guys in their parents' basement, maybe running this network. But as the price started to go up, that drew developers in, that drew miners in. It literally made the value of the network go up. And now today, Bitcoin's the most valuable crypto network in the world. It's the most decentralized. There's tons of developers in it. They've got a bunch of users. You can transact with it in much more places. And that was all driven actually by the price and by the attention that this network drew. So I think like that is the kind of unique aspect to crypto, is that you can attention can drive price, and then price can actually like drive fundamental technology improvements.
I mean, I think that's a great example. I mean, I remember talking to Kevin and I's other partner, Jan, about this like 6 months ago. And he always told me like fundamentals are bearish, right? Like once you can put a metric on something or you have cash flow, like your ceiling is sort of capped, right? It sounds like from what you're saying about Bitcoin is that once attention flips to fundamentals, maybe that's the investment time where the exponential-ish type of returns start to diminish. I might be nitpicking a little bit, but curious how you think about that.
Yeah, I think it's different in each case. Like one of the arguments I make in the piece is that I call Bitcoin a meme coin, and some people would disagree with that. But you can't put Bitcoin into a DCF. You just can't. You know what I mean? Like the way that most people value Bitcoin is like off some sort of relative value to gold. Typically, you could maybe do like a remittance type thing, but like nobody's really using Bitcoin for remittances. So I do agree with the point that like at least today fundamentals do tend to be bearish. But I just think again that's just like indicative of where we are in crypto. Like nobody's using this stuff still. You know what I mean? It's the same couple thousand people on Twitter every day talking about it. So I think like going forward, the protocols that can capture attention can actually improve their technology, onboard a bunch of developers, make the network resilient like Bitcoin can. They will be valued higher. Their fundamentals will be stronger than the projects that don't have attention and can't convert that to like activity.
Kev, I know you have thoughts on when fundamentals matter. We got to hear them.
Yeah, I was gonna say, to Rinko's point, I think one important example is I don't think meme coins have been some of the best outperformers simply because they have better supply side economics, right? There's the whole argument around high FTV, low float tokens, the supply overhang that comes with. And again, that can and will be important, right? Any moment in time, again, markets and asset prices are simply just a function of supply and demand in that moment in time. But I think it's because they're doing a lot better job of actually capturing attention, right? And driving demand from that attention, right? And actually converting that attention into significant buying power, wielding significant buying power behind these things. The fundamental argument is really interesting in my view, because again, coming into crypto, when we first started, writing research on this space, and Tom, you'll remember these days well, there was a lot of discussion. I mean, one of the things you could argue we kind of cut our teeth on was trying to bring more traditional fundamental metrics to these types of networks and eventually the application layer, and trying to figure out how to actually value these things, right? I still think that eventually fundamentals will matter a whole lot more within this space as it gets more mature, and especially as you have a broadening out of the types of market players and investors that come into this space, right, that make decisions on these things. But right now, understanding through this lens of attention, understanding where the market is and what the market is telling us, which is, somebody is much more likely to, the average person is much more likely to favor simple over complex. They're much more likely to favor, a meme coin around a dog with a hat on than they are about Arbitrum, right? And the two are just it's not, again, not saying one is better than the other. They're just very, very different. Now, the time in which, where I think, again, this kind of, I don't want to say it's a novel unlock, but just, again, a shifting of kind of my own mindset. The question of when will fundamentals matter? If you think about traditional markets, right, let's take equities as the prime example. If you're a stockholder, you're a shareholder, you have certain rights that come with that, right? You technically have a claim on a company's assets and profitability if and when they achieve that profitability. Tokens in crypto, we know that doesn't exist, right? There are none of those types of shareholder rights. So one of the reasons why, valuation metrics or price multiples like a price to earnings ratio became so popular and so ubiquitous was because you're measuring what the price of that company is, the valuation of that company is relative to the earnings that you as an investor technically have a claim on, right? But I would also go so far as to argue that those types of fundamental metrics, right, or that type of price multiple, valuation metrics like a price to earnings, it only matters so far as enough other people are looking at it and implicitly kind of agreeing that they're making some type of investment decision off of it for it to really matter, right? It's one of the reasons why, we use an example like Citron Research, which was a notorious short sellers that started off relatively small, eventually got pretty big and had a pretty big distribution, right? Pretty big following. And what they realized early on was you could have the best short selling thesis on a stock, but if nobody knows about it, if nobody sees what you're seeing and you don't spread the word about it, the market's never going to price that in. The market's not going to react to it, at least on the time frame that you want it to, right? Kind of ties full circle back to what we were talking about with if you have the best product or the best tech, but you lack or you lose on the distribution race, you could argue it doesn't really matter. And so fundamentals will eventually, I think, matter a whole lot more, but understanding what the market is telling us right now in crypto, which is really a function of more speculation and really where these flows of attention are going, is really what's driving outperformance in my view. Fundamentals matter so much as they can drive attention to why you should be making some type of decision based on those fundamentals. But you kind of have to have these standard agreed upon metrics, which we don't have in crypto, that everybody, again, implicitly agrees on for those things to actually matter, if that makes sense.
No, I think it definitely makes sense. I mean, just playing this out a bit, is the goal in your mind that this short form attention for tokens that may not have any potential fundamental value later on or project around it, et cetera, is it that they become like biblical or culture, or like, how do we think through? Because crypto buying power is limited, right? Like, why does the rest of the world, why does Michael Rinko's mom want to buy dog with hat, right? Like, again, I'm not being bearish. I'm just wondering, like, when we graduate from our short-term kind of bull meme coin market into something that is sustainable or the next level.
This was a big question for me. Basically, it's like, are we crazy? You know what I mean? Like, are we insane for this? And is it just our little weird community of crypto and everyone else is rational? And the way that I approached this was looking at like how the traditional real world economy is set up. And if you look at like the biggest companies in the world, They're all big tech companies, and they all basically have the same business model at the end of the day. They take your eyeballs, they take your attention, they put ads in front of your eyeballs, and then they convert that into cash flows. And they do that in slightly different ways. You have Google, Facebook, Netflix, but they're all doing the same thing. It's all like that very basic formula. Eyeballs, ads equals cash at the other side. And it's become like this super well-honed machine, right? To the point where like when we're on Instagram or Twitter or YouTube, we don't even really like remember that we're like our attention is feeding into the system. You know what I mean? So from my perspective, the economy has kind of like reoriented itself around this concept of attention. So I think there's like a couple of different like big players that are maybe like worth pointing out here. The biggest, the most important, the most obvious are like the big tech companies. They're kind of like the aggregators and like distributors of the attention. So, you know, Facebook, Google with Google Search, YouTube, Netflix, et cetera, et cetera. There's those guys, and then there's like the long tail of like companies that are trying to sell like a widget and want to like buy access to our eyeballs. So like the example that I give in the piece is Lululemon and Alo, which is like a athleisure competitor. They don't own a platform. They're not Google. They're not Facebook. They have to pay Google and Facebook for access to our eyeballs. So they're trying to put their products in front of our eyeballs. And then there's us. There's like the consumers who are scrolling on their phones every day. So it's kind of like a multi-sided like marketplace. And I guess just to get to the point here, when I go on Instagram and I'm scrolling, I'm paying attention to, some athletes and maybe celebrities that I follow, right? The value of my attention is almost entirely captured by, Mark Zuckerberg and maybe a little bit by like the athlete that I'm following, right? But none of it accrues to me, zero. You know what I mean? Every time I click like on a photo or send a DM to a friend of like a basketball dunk that I like I'm not getting any value from like giving them my attention, And I think the conceptually like interesting part about crypto is it has the potential to maybe like re-architect that value exchange. So like instead of me clicking like on an Instagram photo and 100% of the value of my attention being extracted, with crypto, I can, buy a token that represents the thing that I'm paying attention to, and I can share in the upside of whatever digital good that I'm buying into. So I guess to answer your question, Tommy, like it's really hard to figure out like what's going to like capture attention over long periods of time. But like I'm bullish on the idea of crypto, like giving people a way to like own the things that they pay attention to, whether that's layer one tokens, meme coins, NFTs, culture coins, as now we're seeing, whatever it is, you can kind of tokenize any sort of asset, and then you can buy the things that you like, the things that you pay attention to.
Yeah, and I think to Tom, to your question about does this continue, right? Or are we all crazy? And what is the novel unlock here? I think there's two things. One, there's a lot of people obviously who are up in arms about meme coins, right? Some love them, some hate them. It's a very polarizing topic in crypto, right? Which is already a very polarizing space for those who've been in it long enough. I think it's kind of like wanting to have your cake and eat it too, right? The benefits of permissionless open source technology cuts both ways, right? The person who launches, X DeFi token technically has the same ability, right? Or should have the same accessibility. Then the person who launches, Bodin, right? Or some other, meme coin, right? So you kind of have to take the good with the bad if you want to think about it like that. The other, and this gets more directly to your question around, does this last, is, to be honest with you, I think it does. And I think it actually, this concept only becomes more important over time, because when you think about and Rinko talks about this in the piece, one of crypto's kind of killer use cases so far has been to give a lot more people who may not have access to these types of assets or these types of markets, basically gives a lot more people more ways to make money, right? And that sounds very kind of capitalist or a bit, hand wavy, right? Or a bit greedy. But it really is, I think, one of the kind of killer use cases that we've seen so far. And meme coins, again, are the purest kind of expression or form of that. A lot of people, though, when you look at the underlying kind of secular backdrop here, most people feel like the system isn't working for them and hasn't been working for them for a long time, right? Crypto is very kind of, in a sense, anti-establishment, almost kind of like the rebels, right, who are trying to take the fort. You have these big trends of like widening and, wealth inequality and trends that are favoring, more political dissent. And we see it again in the US, right? I don't think any of us would have predicted that we'd be at this point where we are, given all the political kind of bashing and back and forth, but it is what it is. And it's really a large function of these big trends that we're talking about in terms of the inequality. And again, people feeling like they've been left behind. And so this idea has also been combined with speculative risk-taking activities becoming more commonplace, right? Online gambling continues to rise in terms of popularity. The rise of social media drives FOMO for new experiences, right? We see other things and you want those same things. You want what your neighbor has. We have these shorter attention spans. And so all these things kind of meld together to, I think, provide both a framework, but also a support for what we're seeing today continuing into the future. Like, I don't think this is a flash in the pan. I genuinely think that, a lot of the ideas we're talking about here and the way in which markets function, really what drives markets, right? Which is boiling more and more down, in my opinion, to attention and who can capture it. I think that is a trend that's here to stay.
Yeah, I definitely agree with you. I think it's here to stay. Both of your answers bring up the idea outside of meme coins and just thinking through the Web 2 examples. Do either of you have any views on how crypto, our platforms, our projects, our applications can actually disintermediate the Web 2 model of monetizing our attention? Like, is power returned to the user? Like, do we decide when we interact with it? Like, do we provide our data? Like, all these buzzwords we've heard in crypto over the past years, is there now a new, like, renewed push to actually build something like that? And what would that look like?
Yeah, it's a good question. When I think from like first principles about like what makes crypto different than Web 2, like what are the advantages that only we have? Like, I think there's maybe a couple, but like the most obvious one is just like we have tokens and they don't. You know what I mean? And like as dumb as that sounds, like what that means to me is like just going back to the Bitcoin example. Bitcoin gave a bunch of people tokens and turned a bunch of random people all over the world into like the biggest, loudest, unpaid spokesman ever. You know what I mean? There's like that line, like Bitcoin never had a marketing team, still doesn't. And yet people talk about it every single day online. And no one's getting paid for that. You know what I mean? And the reason that they're doing that is because they have a financial incentive to do so. They share in like the upside of this network. So when I think about like how crypto is going to disintermediate Web 2, I think it's going to be in large part because of tokens and because you can convert a bunch of random people into your biggest supporters simply by giving them an early share in whatever you're building. So I think that's really what one of the reasons why Delphi is so great is that we help builders be thoughtful about their tokens, because aside from the tech, the token is like a core part of the product, I think, and a successful token, or to be a successful project, you really need to have a successful token, I would argue, because in large part because attention is kind of like tied to the price of the token.
Yeah, it is. I mean, you give a really good example, right? Like, I'm over here arguing that it's hard to see where meme coins sort of go as a contrarian in a couple of months, and meanwhile, one person created Bitcoin, and that will eventually threaten like monetary systems around the world potentially. Like, from meme to impact can get pretty wild pretty quickly. I know, Kev, you're going to disagree with me on that impact of financial markets, but
No, I actually would agree. And what I'm excited to see, and we've started to see, I think, a couple early examples of this, but this concept of you've got something that starts off as one of the beauties of meme coins, right? I know we're spending a lot of time talking about it, but I think one of the beauties is that they're not trying to be something that they aren't, right? For a lot of these, there is no argument that this thing has a product that's being built or it's going to generate cash flows, over time. It's quite frankly the purest form of, yes, speculation, but there is a bit of a beauty to that, in my opinion, right? Where it's not like you're going out and launching a product and trying to sell some huge vision, which again, it's not to downplay the ambitions of a lot of people who are building this space. Again, it's why we're here. But I think you can have both sides of it, right? The other thing is when it comes to just Web 2 incumbents, right? There's some that are certainly going to be a lot harder to disintermediate and really kind of capture or steal value from over time, just given how large they are and the size of their moats, right? And depending on what they do. But again, taking a step back, because you've got this permissionless open source kind of base infrastructure layer for the most part, what's interesting is as you think about like the way in which Web 2 applications were built, right? You take some of the big tech incumbents, which a big part, arguably the biggest part of their moats and why they have multi-trillion-dollar valuations is because they have this, essentially monopoly on data, right? They have tons of information, tons of data. They direct that, they target that in different ways to, serve up even more targeted ads, which then flows into their, the ad spend that companies pay to them, to the Allo example that Rinko used earlier. That's really tough to, I think, disintermediate, at least in the short term. But when it comes to just building products in general, the Web 2 versus Web 3 version, because you've got this, again, permissionless open source layer that kind of underpins all of it, the ability to capture that data moat, right, is much, much harder, right? And in some cases, just simply won't exist. So what that does is it kind of forces the competition, in a sense, right, towards the application layer, where if you can, we talk a lot about on-chain identity and being able to port your assets to different applications. And that's one of the views of crypto, right? It's becoming more and more seamless. In a world where that exists and these data modes simply don't, it shifts, I think, that the importance towards the product and the application layer, where it really forces you as ability to have the best product out there, right? Or offer the best experience. Because again, a lot of the back end is becoming more and more commoditized, we'll say, right? Or there isn't really necessarily the competitive advantage there. And so I think that's also going to be a really interesting trend we see more and more of, especially things like SocialFi and, really at the application layer, unlocking creative new use cases because of this technology, but it also kind of, again, is a double-edged sword, and it forces you to both have a better or more interesting or more unique product, right? The actual product that people are engaging with, but also once you have that, what is your distribution go-to-market strategy so enough people, there's enough attention on that people come and use it and stick around, right? It in a sense kind of flips the model on its head a little bit, because again, when you look at those Web 2, especially big tech incumbents, they have such a stranglehold on that proprietary data mode that they don't necessarily need to be on the forefront of, let's say, application or product innovation, because the core of their business model isn't necessarily focused on, Instagram providing a new feature update every single week or every single month. It's just such a sticky product already. And in part because that's where all the attention is flowed. All the companies are going to advertise on because they know that's where the attention is, right? It's where the customers are. And the data moat behind that is really the kind of engine that powers the whole thing.
Yeah, no, it's a hell of an answer, Kev. I'm curious both of your more specific takes though on like how fast this can change, right? Like we've both all talked about how fast attention can snowball, and when you use token incentives to power that, how fast things can change. And we look at the tech incumbents like FANG companies, or sorry, I'm dating myself, Alphabet, Meta, and all the other ones.
Love that
And
reference.
yeah, it's an old one, right? We talk about them as having these insurmountable moats, right? But once you do something that's not linear and is completely different, it becomes very easy to compete with them, right? Bitcoin versus the dollar, Netflix versus Blockbuster. These are just random examples. So I really dislike when people just assume Web 2 will win forever. So it sounds like both of you, what you're saying is that attention from a crypto disruptive project can snowball to such a degree that we can disrupt the Web 2 attention model at some point in the near future.
Totally. Yeah. My view on this, I'd be curious to hear like what both of you guys think. But my kind of thesis is I mean, just looking like at how crypto's developed up to this point, crypto's like predominantly been like a retail phenomenon, Bitcoin was around for 15 years before Larry Fink showed up with his ETF. You know what I mean? And there were random dudes in their parents' basement buying it on day one. You know what I mean? And like every new token that comes out, it's retail. It's like average people who are like experimenting with these technologies. You know what I mean? So retail has front run institutions to every. I'm not aware of like a single trend that like I don't know, even RWAs maybe. But crypto is like a retail technology. You know what I mean? So I think when I think about like how crypto is going to compete with Web 2, I would think that it probably happens from like a bottoms up perspective. So just to be specific, like I don't expect there to like be a protocol that like takes on Google search or like YouTube and tries to compete head on. Like I think how it happens is like basically like crypto gives a brand like Allo that is trying to capture attention a way to like align Allo's incentives with their buyers. It gives Iggy Azalea, artist who's maybe like isn't going to make a whole lot of music going forward. It gives her a way to connect with her fans and kind of share in like the upside of her brand going forward. And I think if crypto can connect basically like creators with fans and create enough of those like relationships from like a bottoms up perspective, then the platforms will naturally like emerge to facilitate that. And I think over time, those platforms will get like significant network effects and, one day maybe be able to compete with like these Web 2 giants. But I think that's how it happens, more from like bottoms up.
Yeah, I also think that like a lot of the stuff we're talking about, right? Like crypto also has to, these Web3 products also have to improve upon what currently exists, right? Which again, it sounds obvious, but I think sometimes we lose sight of that and that can mean it's a, 5 to 10x better user experience. It solves a problem that hadn't been solved for or was difficult or impossible to solve for before this, or it's one that lowers the cost on something that you're already doing. I think to Rinko's point about tokens being this potentially new distribution channel, especially for companies or brands, right? Just using that example, I totally agree. And there's a world in which, because right now, what a lot of companies are facing is, some expense pressure, and in some cases, some margin pressure on their marketing budgets starting to really explode because the cost to advertise on these platforms, right? These gatekeepers that have these big data moats, all these incumbents we just talked about, are only going up, right? And so it's becoming more and more expensive to actually acquire some of these customers. If you can leverage, let's say, tokens in some way that is on par with your brand, in some way that is unique and playful, to be honest, and like exciting, and goes after your target customer, you can start to build out not only a more direct relationship with those potential customers or recurring customers, but you can also lower your customer acquisition costs in certain cases, right? I think another interesting one is, DePIN's, I think, a really exciting, emerging kind of subsector of crypto, right? I look at a project like HiveMapper, where they found ways to tap into the right distribution channels to drive attention to their product from those who are most likely to use it, right? The concept of being able to, put a dash cam, right on your dashboard, and you could be an Uber driver, you could be, a dad who's taking his kids to school every day and then commuting to work. You could be somebody who just travels and is on the road a lot, right? For your job, your ability to actually monetize something that you're already doing is, I think, again, a way in which you can potentially start to challenge some of these incumbent models if you have enough people and you build up enough active users within that network. And you're starting to, again, it's still very early stages. HiveMapper's, nowhere near what Google Maps is, for example, but you're starting to see the point where I think they're hitting an inflection where they're actually able to use a lot of that data they've already collected to sell different kind of, products and services from that data that then, hopefully eventually goes back into, compensating more of the contributors to that data itself, right? So you can create these this is what we talk about when we talk about flywheels and, incentive loops and all that, where you can actually challenge potential incumbent models today as they exist, because again, a lot of, your Web 2 companies, your traditional companies, the way in which they operate and they maximize for things like shareholder value, they're trying to keep as much of that value, right? Or as much of that money or profit they're making internally within their own companies. I'm also not in the camp that, and this might be contrarian or ruffle feathers, like kudos to the Metas and the Googles of the world for building that type of business model, because it is, again, hindsight being 2020, obviously has proved to be incredibly lucrative and was a very, very unique kind of approach and betting on what the future of, this Web 2 world at that time would look like, right? Now it's just, I guess the point I'm trying to make is if crypto can offer and Web3 can offer a better way to actually do things or provide products and services or lower costs in certain cases, if it can provide a better thing, a better experience, that in my opinion is what's actually going to drive real mainstream adoption of real people to use it outside of just, pure speculation, which again still has its own slot here and has certainly attracted, I think, a lot of people. I think you're going to have a combination of both, but it's not as if, this conversation might sound like I'm bearish fundamentals, or I don't think they matter at all. I absolutely do, and they'll matter more in the future. But I think again, it's trying to understand both sides of this, right? And the tension being, if you think about it, is like, what are the demand drivers that drives people to buy or purchase assets, right? Or what is the demand side of any market? Fundamentals can be one, attention can be another. It's not it's not an or.
No, I mean, I think everything you're saying makes sense, Kev, right? Like it's like that puzzle where you put the puzzle pieces together and you sort of land on the answer, but it's just that attention is mega important. There's things we can do in crypto, just given the structure and tokens, that we can't do in Web 2. And eventually, I think it's more likely than not that we develop a new form of application or platform that is used within crypto or the real world. That is just a totally different model. I mean, maybe to throw an example out there, like I would love the other end of the extreme on like a crypto AI app. Like I would love an application that does not show me thousands of tweets, thousands of Facebook messages, thousands of Instagrams, right? I'd like to see the top 3 memes that'll make me laugh, the top 2 emails I have to respond to, and like 3 tweets that are like relevant to whatever I'm doing on Google Docs at the time, right? Like I'd love the opposite of the attention economy, right? And that doesn't really work in a Facebook model, right? Where they have to make money off views. So I don't know. I think you're both really hit on something important here with the attention side.
I think it's a really interesting Pandora's box open on what does this, like what happens to this attention concept or the attention economy, as a lot of people think about it as. What happens that in a world of ubiquitous AI?
So it scares me, right? Because on the one extreme, you have the example I just gave, right? The other example is that you have AI that is so smart and can convince you to do things and bias you without you even knowing it, right? It'll act as your best friend. It'll convince you in ways that only you understand or only you can be manipulated through. And it'll get you to do things that you otherwise wouldn't want to, right? It'll get you to buy a token. It'll get you to grant them access to some meat space intermediary that they need access to, a checking account or whatever. And they'll provide synthetic content and fake content that caters to your beliefs and your likes to get you to do things. So it gets really scary on the the dystopian AGI side, but I guess it could be interesting if it's wielded the right way.
Yeah, to riff on this a little bit, like I find it really difficult to reason about like how AI will change our society. Like I think it's a bit like COVID, like until it happens, until we're living in it, like nobody thought that like we wouldn't be able to leave our homes, you know what I mean? Or like we'd only be able to talk to each other, but 6 feet apart. Like that was not even the smartest, most forward thinking people before March 2020 could have predicted that. And I feel like AI is like a little bit like that. Like it's just kind of like a black box. One thing that I do feel like pretty confident about is that like AI is just gonna like change the way that we like interact with the internet and probably like the whole world, you know? I think it's gonna, the easiest way to think about it is like we're all gonna have our own like AI force field around us. Like it's gonna be like a filter. So every piece of digital content that I look at is going to like be AI filtered, right? And I think ChatGPT is like a very primitive example of this. When I sit down to research a report, I usually have up, Google Docs or Notion on one side and ChatGPT on the other. And when I have a question, instead of like Google searching that question, I ask ChatGPT that question, and ChatGPT goes and gets the answer for me, retrieves it, and then delivers it to me. It's, these things are like answer machines right now. And for now, these models are mostly just chatbots, so they're kind of like retrieving an answer and going to get it. But already we kind of see like how AI is going to basically like break, I think, like the advertising business models of some of these big tech giants. And like the most obvious one, I think, is like Google search. Now like Google's whole business model was like putting a link here and an ad right below it. You know what I mean? But like now when my eyeball is replaced by ChatGPT goes and grabs the link, sends it to me, and we totally disintermediate the ad right next to that link. You know what I mean? So what does that mean? I don't really know what it means. I think Google's search business starts to slowly deteriorate. But then I think from like the long tail of like the Lululemons and the Aloes of the world that buy that link, that buy that search ad, right? How do they connect with me? You know what I mean? In a ChatGPT world, they need some other way to grab my attention and retain it. I do think that there's an interesting opportunity basically for crypto to come in and connect, Aloe and Lululemon with me and break through the ChatGPT force field, basically.
I hate to be the bearer of bad news, and I like your take, Mike, but it may play out where we just get ads within the LLM, right? Like, hey, I want a new sweatshirt. Where do I buy it? Bam, Lulu ad. It's depressing. It's not that imaginative, but
yeah, I think I agree. And again, speculating on this stuff is at this point just speculative, right? We don't know what it'll wind up looking like. But I do think that concept of tokens being able to be used as a new, and it can even start off as an alternative, but eventually the preferred distribution channel in a way for a lot of these companies or brands, or causes that are trying to connect with people, especially like the target users or target customers. I do think that is something that we will eventually see more of. I thought, and I've had this kind of thesis for a couple of years now, I thought we'd start to see that a lot more, especially, to be honest, last cycle round when you had NFTs getting big, everybody from Starbucks to, your big brands all kind of even banging on our doors, right? Asking us how they could use this technology, what ways they could do it. And again, I think it's going to take time. I think a lot of that was focused around just price appreciation and some cash grabby things. But I do think fundamentally there is a good argument that in this kind of post AI type of world, tokens can be a really, really strong way to break through and kind of bridge that gap and make that direct connection with a customer, right? Because from there, once you have that, you can get eventually a whole bunch of interesting data around that. You can see, who owns Lululemon and Aloe tokens, or if you're a new up and coming emerging brand, the first people you probably want to target are maybe you have a token gated site, right? That only Aloe token holders and Lululemon token holders can access, right? That gives that kind of exclusivity to it, but also you literally know you're going after your target market because you're an Aloe competitor, right? There's so many things that you can kind of build off of this that I think tokens enable, that is truly like can create some novel use cases. And what that does to not only ad tech, but what that does to marketing strategies, go to market, how these brands, it's going to take a total rewiring of a lot of people that sit in these C-suites, to be honest, having had several conversations with a lot of them. But I do think eventually, this might even be a good example where the old version of this gets either so expensive or it's no longer providing the type of value that these companies are looking for, they're seeking, that crypto and tokens wind up coming in as a really strong alternative option to allow them to do something that they know they want to do and they frankly need to do, allows them to do that better, right? And I think that's kind of the inflection moments we're still waiting on.
Yeah, I would agree. I've been thinking about this a lot recently, just with like all the celebrities that have come into crypto. So we've had like, Iggy Azalea maybe being like the most prominent, but like there's been a bunch of them, it feels like, over the past month or so. And I've kind of been asking myself, like, if one of these guys called me up and was like, hey, it's Iggy Azalea, what should I do in crypto? You know what I mean? Like, how do I connect with my fans? What would I say? And I honestly don't have a great answer. You know what I mean? Other than like, and I think that's why these people default to launching a meme coin, is it's kind of unclear like what the playbook is right now to like organically connect with your friends. I think to your point, Kev, like the applications are still pretty immature. I do think like the big difference that I noticed from like last cycle is just like the infrastructure is better. So like a lot of this stuff is now happening on Solana as opposed to Ethereum. And Solana has its share of issues. But like the network has been able to handle all of these like celebrity coins, you know what I mean? And like every transaction is like super cheap and like relatively fast. So I think like it's just where we're at right now. Like the infrastructure takes a while to build out. I think we're almost there. We're certainly better than we were, 3-4 years ago. And now everyone's kind of just waiting on like these applications to come out and really facilitate this like connection. But like I guess one final thing that I'll say is like, why would like a celebrity like come to crypto? To me, it's like pretty obvious. Like I think like I would just use the Iggy Azalea example. Iggy Azalea doesn't know, can't separate her average fans from her super fans. So maybe there's a person who listens to her music once a month, and then there's another person who listens to her music every single day. You know what I mean? The every single day person is like really important for her. And it would actually maybe make sense for her to like reach out to the everyday person and like invite that person to a free concert or something like that, because that person is driving so much value to Iggy. But she has no idea who that is. You know what I mean? In the Web2 world, because it's the relationship is intermediated by like Spotify and Apple Music. In crypto, she knows exactly who her biggest fans are. She could just look on chain at who's holding the most amount of her tokens. You know what I mean? And she can directly reach out to that person and be like, "Yo, you want to come to a con?" You know what I mean? So I think the relationship is like it could be way more richer in crypto, and we just need like applications to like facilitate that, I think.
Yeah, Tommy.
Yeah, no, sorry, I'm just thinking just like you are. It's exciting. I mean, I think it's probably the topic of another podcast, right? But I think the crypto AI melding will be able to create applications that can like augment this whole attention economy idea in a pretty powerful way, right? I mean, just thinking through like one very basic example, excluding all token incentives, ownership in projects, governance, the whole 9 yards for helping to build things. If you're that Lulu fan, Mike, and you want a new pair of ABC pants, right? Like, you go on Facebook, you get ads for it. They know you bought it. They know which ones, right? You get ads for it. But if you're on your own personalized LLM, like, maybe the new Lulu pants like really aren't that good, right? So like, it scans all the Reddit reports and it gives you those negative reviews, right? And it scans through Amazon's like reviews, and it tells you that, hey, these aren't that great, but people who disliked them went and bought the athletic or I forgot your other aloe pants or whatever, right? So the whole idea of like an attention economy that's not biased by marketing spend, I think is like a really interesting concept. And I don't know how we pay for that, but I'm excited to see what it looks like.
Yeah, you brought up a good point earlier. Like maybe they'll just put ads in your LLM, right? And maybe that'll happen. Like I don't really know. If I had to guess though, I'd probably say that doesn't happen, or it doesn't like look the same as like the traditional like ad tech world that we're coming from. And the only reason I say that is because people just don't like ads. You know what I mean? Like to your point, you say you want to like go on the internet or talk to your chatbot and have it like deliver you the best memes, the best content, and just like streamline, cut out all the bullshit, basically. You know what I mean? I think we're gonna get that. Like someone is gonna build that because enough people want it. You know what I mean? And we are gonna get a chatbot or whatever AI becomes post chatbots that will be like an oracle. It'll be like an answer machine. It'll give you whatever you want. And there will be no ads because there will be a version of that someone builds that doesn't have ads. And I think people are in that world. You're going to have to find, if you're a small business, if you're a brand, you're going to have to find a new way to connect with people other than putting your ad next to a Google link. And I don't really know what that is. All I know is like, if crypto has proven anything, it's that crypto really knows how to turn people into like passionate, unpaid, marketers.
No, I agree.
Yeah, owning,
I have
owning
one other
versus renting is a very, very big difference, and that applies to
It's
Wealth
hard to
effects
own
also applies.
nowadays.
Yes, yeah. So if you can own in assets in certain ways, like we're talking about, right, with your favorite brand, whatever it is, that point about you becoming, an unpaid spokesperson in the sense of unpaid directly, but you have some type of ownership, right? Some type of exposure to whatever that is, that product is. It is a really, really powerful galvanizing force.
It's like that meme, like you'll own nothing and you'll be happy. Um,
Like the
I
US
guess
housing market at this point.
yeah, you're not wrong. Well, I know we're a bit at length, but conversation's very interesting. One last topic I want to talk on real quick is just going back to the beginning of the podcast, right? We mentioned that attention is all you need, right? You go to the best distribution channel, best tech doesn't necessarily matter, et cetera, et cetera. I'd love to get both of your net takes here on, does this attention economy, maybe I'm over focusing on meme coins a bit, but just, entertain this. Is that a net negative for crypto, right? Are we not surfacing the builders that have revolutionary tech that really could augment it just because they're not on podcasts, they're not good at tweeting, right? Like, are like, what is this? Like, how do we make sure that crypto net moves forward and it just doesn't become an attention flywheel for short-term gains?
Yeah, it's a great question, and something that I struggled with before I wrote the piece, while I was writing the piece, and still now. So I guess like just to steel man that argument, I do think it's like demoralizing. You know what I mean? Like the three of us are all in. You know what I mean? We're on this podcast. We've devoted our careers, our professional reputations, our personal accounts, our whole lives. We're long this industry. We believe in it, and I think we believe in it because we think like crypto can change the world, can make the world like a little bit of a better place in the future, and like we all want to help in our small way to like do that. That's, I got into crypto to make a little bit of money at first, and I stayed because I bought into that idea that we can truly change the world. And I think when you see like all this meme coin stuff, you start to question that. You know what I mean? You're like, what are we doing here? You know what I mean? Like, are we just going to punt meme coins back and forth to each other for the next, like, am I wasting my career here? Did I make the wrong bet? Should I have just joined OpenAI? You know what I mean? Like, these are all the questions that I have. So I think it's like very fair to ask, like, are meme coins a net negative? They certainly are from like the regulatory perspective. I think they don't make Washington or the regulators like us anymore. The only like real counterpoint that I see to like that take is like basically like, do you want users or not? You know what I mean? And I think like the problem that crypto has had to this point is we've built a ton of cool tech. You know what I mean? Like we have like ZK, we have all this crazy technology that crypto is basically financed. You know what I mean? But nobody uses it still. You know what I mean? Like the users still haven't showed up. There's only around like 5 million people that are on chain month to month. So it's like, do you want users or not? And I think meme coins are a way to onboard people to crypto. And meme coins will go up and most of them will go down 99%, you know what I mean? To zero. But some small fraction of the people that are brought in from meme coins will stay, just like the three of us stayed, you know what I mean? And they'll become developers, they'll become users, they'll become advocates for the space. So my core belief is like, more people equals good. And if meme coins deliver more people to crypto, then that will net out to being good over a long period of time.
God, that amped me up. I loved it. That's a great answer, Mike. Kev, what about you?
I'll take a bit of the other side on that one. I think meme coins are net beneficial for the space. And there's a couple of reasons for that. One, like I said earlier, I think putting too much emphasis on meme coins and them being essentially intrinsically worthless, right? Or like who wants to punt around these things, is bringing almost too much bias into the equation, right? Because what meme coins have told us, like we talked about, is that right now, given where this market is, given the average active crypto user or active crypto participant and where we are in the kind of maturity cycle, there's a reason why these things have taken off, right? If everybody in this space was a true blue fundamental driven investor, meme coins would be dead in the water, and they're not, right? So the market is telling us that there is a demand for this thing, right? Whether that's right or wrong, it's kind of like the argument, do you want to be right or do you want to make money, right? Whether or not that's right or wrong, we can debate about, but it's something the market is telling us, and I think we need to pay attention to. The other thing is meme coin media got so explosive, right, so quickly that it actually did battle test Solana, right, in a number of ways. And so that led to, core developer jumping in, all these chats, a lot of patches, upgrades that came. There was certainly, a period there where, things were not great, right, and actually kind of started to break down what Solana's primary benefit was of, fast, cheap, better UX chain. But net again, it helped, actually price going up did help improve the tech, I think, in a number of ways. And it also, again, gives people the ability to express and potentially make money and express a thesis on something that sits outside of the very quote unquote fundamentally sound but very deep technical types of projects and tokens that also exist out there, right? It's kind of like the stock market isn't only made up of infotech companies or only made up of financials, right? With infra and DeFi, there's a whole host of consumer applications, consumer staples, consumer discretionary, industrial. There's all these different sectors I think crypto is going to develop in a very similar way. And the last thing I'll say, which is kind of building off of Rinko's last point, more people, whatever brings in more people, there's going to be, some people will leave, but every cycle we've seen a decent chunk of those people stay, right? So that kind of snowballs in the user base, active user base gets bigger and bigger over time. Crypto also sits at this really important inflection point where, because we have things like currency abasement and monetary inflation, and which raises the hurdle rate on how much you have to make from an investment standpoint, right? What your ROI has to be in order for you to keep pace with, purchasing power and to actually outpace inflation, especially when wages come down. We're now at this point where, because that hurdle rate gets higher, investors are becoming increasingly hungry for these types of growth assets, right? Or these types of growth markets. And I would argue that crypto is probably one of the best types of markets out there, right? Across the board, that offers those types of high growth, high risk, certainly, but high growth opportunities that more and more investors are going to be looking for. And so if you think about crypto almost as its own economy of sorts, if we jumble everything together, I think we're going to continue to see more capital inflows into this space, because it's similar to like an emerging market economy where you start to see rapid growth, right? Oftentimes in those countries, you see huge capital inflows. They build a bunch of stuff. They build way too much capacity. There aren't enough people there. Population hasn't grown enough. Kind of similar to what happened in crypto, right? We built a ton of, early use cases or infra. We didn't have the users yet. Eventually, these economies start to actually build other, services, right? Other businesses that then can operate within it. And that's how these wind up flourishing and becoming, going from, frontier to emerging, then emerging to eventually developed economies. Crypto is kind of like this emerging economy at this point, where you'll have these big booms and big bust cycles because you have tons of capital inflow. But the reason for that is because it is one of the fastest growing, it's going to be one of the fastest growing economies in the world. And more people will come, and I think more and more capital is just going to follow that.
Yeah, Kev, that such great examples, like the Solana stress testing example, the onboarding example, just, just the education example too, like buying a meme coin and, just going through the motions of the dollar is a meme as well. Like it, you don't get there unless you have an alternative. Kevin, Mike,
this point
been,
runs on memes, man. It runs on memes and narratives. And that is, if you can pinpoint those, like you can do really well.
I love it. Mike, thanks so much for writing this report and giving us such a fun topic to talk about. And just to have such a great impact on Delphi research and everyone who read it. Definitely recommend checking out if you haven't. It's incredible. It's right on Delphi's homepage if you look around. Kev, thanks so much for joining too. Your points are incredible and it was a lot of fun.
Thanks for letting me crash, fellas.